Hello, hi. I'm Bharat Joshi and I'm the Investment Director for Aberdeen Asset Management Indonesia. I'm here to share with you why you should be invested in Asia Pac, not just for the next 1 year, but at least the next 3 to 5 years. A few key positives that I have actually cited. One, we are now seeing a recovery in the US. And this recovery in the US is very positive because they're going to start importing goods from Asia, predominantly from China. And China, which has not seen a huge amount of exports in the last 10 years, are now starting to see a big recovery. And this positive is creating a ripple effect to emerging markets in Asia and, for example, like Indonesia, which are big commodity exporters. The second big factor, which is actually very interesting, and I'm seeing this across Asia, is inflation rates have started to pick up. And this is positive. Why? Because then corporates can actually start repricing their products higher, and that will be translated to higher revenues and perhaps even better earnings going forward. The third biggest factor we are starting to see is now a pickup in investments. And now with banks starting to increase credit lending to corporates, and corporates now increasing capacity and manufacturing, that is actually positive to create a multiply effect on economies in Asia. But overshadowing these three key positives are two key negatives, and something you have to bear in mind when you're investing. And these two key negatives, one is interest rates. Interest rates are definitely going to pick up, and it's more pronounced in the US, where they've come from a very low interest rate environment and they're pushing on to a higher interest rate environment. This transition period or resetting of interest rates is going to create a short-term negative effect on currencies, and that's what we have seen in early 2018. But I'm convinced this is only temporary, and you as investors should take advantage of this volatility in markets to actually invest and take advantage of this mispricing in share prices. The second key negative you have to bear in mind is geopolitical risk, and where this geopolitical risk is coming from is largely driven by North Korea. The sensitivity between North Korea and the US is creating this temporary issue in terms of volatility in markets. So with the three positives and the two negatives, I'm still generally very optimistic that earnings will recover in the next 2 to 3 years across industries. And with that, I wish you all the best and happy investing.